Hey guys, we're going to be talking about temporary and permanent accounts. So you'll see in this image here, which I'm going to post into Canvas, that I have my yellow ones, assets, liabilities, and owner's equity. These are your permanent accounts, meaning that they continue from year to year. So like cash and bank will always have a balance. Capital will always have a balance. Our debts and accounts payable, which is our liability, will always have a balance. Now, things like expenses, withdrawals, and revenue, these are what are called temporary accounts, meaning every year at the end of the accounting period, which is typically a year, we zero them out and they start the next year with a zero balance. It's so that we can compare year to year how much money we are spending on each expense, or how much we are earning from each area of revenue, or how much we are taking out as a business. You'll kind of see how they affect the ending, the capital, when it comes to chapter, I believe it's 9, chapter 9. Okay, so again, these are our temporary accounts. Okay, expenses, withdrawals, and revenue. You'll notice over here I have assets, expenses, and withdrawals. They all increase on the debit. They all decrease on the credit. Liabilities, owner's equity, and revenue all increase on a credit and decrease on a debit. Okay, so let's take a look at the demonstration for temporary accounts. Okay, so we're Hot Suds Car Wash with Regina Delgado. Here's the list of my accounts, and I have them in my T-chart here. All right, so the first one says we received a check from Car Wash Services. So again, received a check automatically means that we are talking about cash and bank. And when we receive it, that means we're going to increase it. So we're going to increase our cash and bank by $1,675. Okay, again, double entry accounting. Every debit must have a credit. So this is my debit, now I have a credit. We got this cash because we provided car wash services. Okay, so anytime we're providing services or we charge a fee, you're talking about a revenue. Sometimes you will see revenue accounts listed as fees. So for the car wash, okay, it increases, again, going back to that T-chart right here, we've got that revenue, which increases on a credit. So we're going to increase our revenue for $1,675. Okay, every debit must have a credit. All right, the next one says we paid the monthly rent $450 by writing a check for $212. Okay, let's start with the easy one, writing a check $212. That automatically means whenever you see writing a check or you see check with a number, we're talking about a credit to cash and bank because we wrote money. So we're going to do 2 $450. Okay, and we wrote the check for our monthly rent. So that is our rent expense. And expenses increase on the debit, and since we credit cash and bank, we're going to debit rent expense. Okay. Then it says, well, Gina Delgado withdrew $250 for personal use. Okay. So when we withdraw, we automatically are going to debit because it increases on a debit. So we're going to type 3 for $250. Now every debit must have a credit. This is our debit, and because she's taking cash out, we're going to credit cash and bank. We are not going to touch capital. It is withdrawals and cash and bank. So we're going to type 3 and then 250. Oh, excuse me. Okay. Then it says we had a computer repaired at O'Brien's Office Supply for $245 and was given until next month to pay. Okay, so we're given till next month to pay. That means we did this on account and it's now a liability. So we're going to credit and increase our accounts payable by, how much was it again? $245. Okay, that's our credit. Now our debit, because we had a computer repaired, meaning we did some sort of maintenance expense, okay, we're going to record that here under maintenance expense. Okay, so that's the rules. I'm going to go ahead and give you a hint. Here in this chapter, you will never credit expenses, you will never credit withdrawals, and you will never debit revenue. Now that changes when we get to chapter 9, but this chapter stays with revenue always being credited, expenses always debit, and withdrawals being debited. If you have any questions, please email me.